Here we are at section B. Hopefully you've got a good understanding of how section B is set up. There are 15 questions, each worth 2 marks, so 30 in total, which means we have 54 minutes per question. However, it's based on 3 cases, so each of those cases is 5 questions. Probably a better way to look at it is we've got 18 minutes for each case, and each case will have 5 questions. Some of those will be relatively quick, some will be requiring a lot more of our time, and what we should aim to do is use 18 minutes to answer those questions. And I will show you my method where I try and identify the easier ones, the quicker ones, get those answered first, and then I've got more time that I can allocate to the slightly longer ones. But what's very important is when we get to the 18 minutes, we should stop that question and move on, because there's some low-hanging fruit in the other section B questions that we should be trying to get first. So 18 minutes for each case. We will identify, normally it's 1 or 2, which I call an outlier. We'll answer those, bank those questions, bank some time, and then the residual time we've got left, maybe it's 16 or 15 minutes, we can spread over the remaining questions. If there are 3 left, then we've now got 5 minutes for each of those 3 questions that are left. Section B will have narrative like this, which applies to all of the questions, and then each question will be set up on the right hand side, sometimes with some additional information which is specific for that question. And what I do is I go hunting for the outlier, so I actually click through these and see if I can find the outlier. An outlier to me is a question or questions that do not really need this information. And as I just said, one of the reasons to do this is they're often easier and faster, so I get the easy marks, I save some time or bank some time, but also because I'm going to quickly look and see what each question is asking. When I then come back and read through this, I've primed my brain to know what it's looking for. So it gives me context so that when I read through this, it's then going to link back to questions which I know are coming. I can see this as a calculation where we need to calculate the expected value. I can see it's a decision tree, so that's not an outlier because I definitely will need the information here. We've got to choose the optimum course, and I can see again there's a calculation involved there. This is a maximum price for market research, and I have to do a calculation, so that's not an outlier. Which of the following best describes the value of imperfect information? This is an outlier. Imperfect information doesn't come up very often. Perfect information, it relates to risk when we can use probability to determine how likely something is to happen and how much would we be willing to pay in order to eradicate that probability and know for certain what's going to happen. Imperfect information is not as good as perfect information, but it's better than no information. A good example might be if we were selling ice creams and we know if it's sunny, we'll sell a certain amount, but if it's rainy, we know it'll be lower. If it's overcast but cold, then we know it's a different number. We can't know definitely what the weather's going to be, so we can't get perfect information, but we could look at a weather forecast. That would be imperfect information because they're not always correct, but that could help us decide how many ice creams we stock on that day based on the weather forecast. So with that in mind, which of the following best describes the value of imperfect information? Option 1, the value of imperfect information is always lower than the value of perfect information due to the uncertainty of such information. Now, although my default is when I'm given an absolute in a multiple choice, assume it's incorrect until proven otherwise, this is actually the correct answer. It is true that the value of imperfect information is always lower than perfect information, and it is because of the uncertainty. So that's correct. Using the scenario I just mentioned, a weather forecast is imperfect information. If I invented some system that gave you an absolute definite prediction of what the weather will be, that's going to be more valuable than the weather forecast, which can be wrong. Let's look at the others. The value of imperfect information may or may not be lower than that of the value of perfect information, as it depends on the extent of uncertainty. That's not true. That's in conflict with the correct one above. The value of imperfect information can be derived without considering the probabilities of the uncertain information. No, it's all based on probabilities. That's how we can calculate the value of perfect and imperfect information. The value of imperfect information is the minimum cost to be paid for obtaining such information. No, it's the maximum cost. So that's an outlier. Question 20. Which of the following is not a characteristic of an outcome point in the decision tree? So once again, this is an outlier. A decision tree, or the design, if you like, of decision tree is it has outcome points and decision points. A decision point is where we make a decision and is normally a square or a box. And an outcome point is a point at which we calculate an expected value and is normally denoted by a circle. So which of the following is not a characteristic of an outcome point? So we're talking about the circles in a decision tree. The occurrence of outcomes at this point is beyond the control of the decision maker. That is true. So remember I said the decision is made here. The outcome is based on this unknown, and we use expected values and probabilities to find out the value at that point, but we cannot control it. So that is a characteristic, so it's not correct. The sum of the probabilities of all outcomes at each chance fork may not necessarily equal to 1 or 100%. That is false, that's incorrect, so that's the answer. Everything that feeds into a decision point, i.e. the fork, has to total 1 in terms of its probability or 100%. A decision will not be made at an outcome point. That's true. Decisions made at a decision point. There could be one or more outcomes at an outcome point. No, each outcome is as a result of a decision, and we cannot have a second outcome at the same point. So the correct answer is just that one. We found 2 outliers in this question. So 2 of the 5, i.e. 4 marks, were based on outliers. That would normally take 7.2 minutes, but we have probably done those, even with me talking around the point, in 2.5 minutes. Let's assume it was 2. That means we've now got 16 minutes for the other 3 questions. We've also had a look at what's coming up, so that will help us when we read through this. You may still want to be strategic in your approach. You may think that some of these calculations are going to be easier than others, and you might want to choose to do those first. I'll do them in order, but let's look at what we're told. So here's the scenario. Alco is one of the leading graphics processing unit manufacturers in Yeeland. Given the geopolitical unrest in the region, the board of directors is currently exploring alternatives pertaining to one of its factories, located in one of the countries that's been severely affected by the regional uncertainties. Currently, there are 3 alternatives under consideration. Alternative 1 is full expansion. Alternative 2 is partial expansion. Alternative 3 is closure. Should alternative 3 be selected, there'll be guaranteed proceeds from the disposal of all existing assets. Based on Alco's management team, it's expected the total estimated net cash flow, ignoring the time value of money, of alternative 1 and 2 will be subject to different states of demand, which is currently uncertain, and there's a 70% chance of high and a 30% chance of low demand. This is summarized in the decision tree below. So you see at decision point, they can either choose to expand fully, expand partially, or close. If they close, they're guaranteed to get 5.5 million. If they partially expand and there's high demand, they'll get 6 million. If they partially expand and there's low demand, they'll get 2 million. And there's a 70% chance of high, 30% chance of low. If they do the full expansion, then if there's high demand, they'll get 9 million. But if there's low demand, they'll lose 3 million. So we need to work out which of the following options is the expected value. And it's asking us for point B and point C. I'd like to point something that jumps out to me here. Point C, option 1 and 2 and option 3 and 4 have the same. Whereas for point B, they're all different. So if I just do the calculation for point B, then I should be able to answer the question fully. If I do the calculation for part C, I'm only going to eliminate 2 of the options and still have to do the point B calculation. This is a time pressured exam, so I'm going to be really efficient. I'm only going to do a point B calculation. So at point B, if there's high demand, that means a 70% chance of getting 9 million and 30% chance of losing 3 million. So the calculation is 0.7 multiplied by the 9 plus 0.3 multiplied by the minus 3. Now it doesn't like that, and that's why it's good to practice on the exam platform. I haven't used this calculator before, so there's obviously a different way I need to be putting in that calculation. So I've reconfigured the calculation, moved the minus out here. So this gives me 5.4, so it has to be option 4 is 5.4. Just for the benefit of the video, I will do the point C calculation, but like I said, I wouldn't do so in the exam. So once again, it's 0.7 by 6 this time. Then we do a add on 0.3 by 2 is 4.8. So it agrees that it was either going to be option 3 or 4 based on the point C calculation. option 4, the correct answer. What is the optimum course of action and the resulting expected value? So it's basically asking what choice we would choose. Is it 1, 2, 3, full expansion, partial, closure? I'd be very surprised if you got this in the exam, because if we look at what it's got here, it's given us the 2 calculations that we worked out in the prior question. On occasion, you do get a bit of information in one part of the question that helps with the other, but not normally as blatant as this, that it gives us the 2 calculations. But as it has, we're reassured that the calculation that we did in question 16 is correct. Which would you choose? We would always choose the one with the highest expected value, and that's alternative 3 if we're just making a decision on financial reasons only. So that's closure is the one that gives us the 5.5 million. And then the market research company proposed to ALCO that they can provide an exclusive version of a market research report with a guaranteed forecast on the state of demand at a premium price. What's the maximum amount they should be willing to pay for this exclusive version of the market research report to the nearest 2 decimal places? This is a what is the value of perfect information question, and we calculate the expected value without perfect information and the expected value with, and the difference is the maximum amount we'd be willing to pay for that information. So the expected value with is worked out by what we would do if we knew what was going to happen. So this research report will tell us whether demand is high or whether demand is going to be low. If it tells us that demand is high, which of these options would we go for? Well, we can eliminate the low demand ones. So our options are either to make 9 million, 6 million or 5.5. We would choose to make 9. So if it tells us demand is going to be high, we would choose full expansion and would make 9 million. And there's a 70% chance that the report will tell us that demand is high. So we do a 0.7 times 9. If demand is low, we get rid of this one, we get rid of this one. So we can either choose to lose 3 million or make 2 million or make 5.5 million. Well, we would choose the one with the highest. We would choose to close and make 5.5. And we know there's a 0.3 chance of there being low demand. So that's the calculation we need to do, 0.7 times 9 and 0.3 times 5.5. I suspect a lot of students did 0.3 times 2 if they got this wrong. But remember, we would always choose the one that gives us the highest outcome financially. So it's 0.7 times 9 multiplied by 0.3 times 5.5 is 7.95. With this report, we would have an expected value of 7.95. Without was what we chose in the previous question is 5.5. So the difference is 2.45 million. We want it to 2 decimal places, so 2.45. And that's the end of this question, ALCO. Okay, so we're on to this next section B question called greenwash. Just like before, I'm going to go through, see if I can find any outliers, do those first in order to bank some easy marks, bank some time, and then come back and do the remainder. This is a calculation asking me for the contribution per bottle of greenwash. What's the break-even sales? That's also a calculation. Another calculation, what's the sales revenue required to achieve a target profit? This one could be an outlier. Which of the following statements regarding the margin of safety for greenwash is correct? You can take a view on this one. You might be thinking, well, I can see the word greenwash comes up in each of those, so maybe it's not an outlier, maybe it does use information from here. Or you could say maybe they've just used the company name, but it is a bit more generic. My advice is don't spend too long wondering, just make a decision and go with it. I'm going to read on and see if I can answer this question without reading this. So we're talking about margin of safety. Option 1 is the anticipated or actual production quantity of greenwash that exceeds or falls short of the break-even point. Margin of safety isn't about production, so that's not true. It's the anticipated or actual sales quantity of greenwash that exceeds or falls short of the break-even point. Yes, that's the correct one. It's the anticipated or actual production quantity that exceeds or falls short of the production quantity required to achieve a target profit. Well, that's wrong for both reasons. It's not about production and it's not about a target profit. And then this one is the actual sales quantity that falls short of the quantity required to achieve a target profit. So although this is about sales, it's not about a target profit. So that's the correct answer. And again, this looks like it could be an outlier. Indicate by clicking on the relevant boxes in the table below whether each of the following statements regarding the uses of cost volume profit analysis is correct or incorrect. Option 1, the analysis assumes that fixed costs per unit remain constant. That's incorrect. There is an assumption that fixed costs for a period of time remain constant, but not that fixed costs per unit, because fixed costs are fixed, but if we change our volume, i.e. the number of units, then the fixed cost per unit will change. The analysis is not relevant for a public hospital. One of the assumptions behind CVP is that profit maximization is a primary objective, which it wouldn't be in a public hospital, so that is correct. So likewise, we've got 2 outliers that we've answered, so now we'll go back and look at the other questions. The scenario is a household product manufacturer is planning to set up a factory for the production of a newly launched eco-friendly detergent called Greenwash. It's planned to produce 1 packaging size of Greenwash through a semi-labour-intensive production environment. Estimated sales and cost information pertaining to Greenwash are given below. Direct materials at $7 per litre, direct labour 1.5 hours per litre at $10 per hour, overheads 14 per litre, and we've got an asterisk. The overhead rate of 14 per litre is derived based on the budgeted output of 3,000 litres. However, should the budgeted output of a period be 5,000 litres, the overhead rate will be 12 per litre. And selling price is 75 per bottle, with each bottle containing 2 litres. The information it's given us here isn't in the exact format we want to use it. Although we've got direct materials at 7 per litre, each bottle contains 2 litres, so we'll need to double that. Direct labour is 1.5 hours per litre at 10 per hour, so that's 15 per litre, but again 2 litres here, so that would be 30. And the overheads, we've got a rate based on 3,000. We're told what it would be if it's 5,000. So those overheads are likely a mix of some variable and some fixed costs. So that's probably going to suggest that the high-low method is going to come into play. We need the contribution per bottle. There's quite a lot of work we need to do for this question. And so your initial temptation may be to leave it and to do one of the others. However, unusually, the way this is set up, this question will rely on our answer from the previous question. In the exam, they shouldn't do this. Each of these questions should be able to be answered independently, but this one, because we're looking at break-even sales, will bring forward some information from the first question, as will the sales revenue to achieve a target profit. So unfortunately, we are forced into going in order, but like I say, this isn't written by the examining team. This is written by a tutor, and what they should have done, and what you'll often see in the scenario, is you might get some figures like this and then some different figures based on a different product or something like that. And it will tell you what the contribution per bottle is for that second product. And then your other questions will relate to the additional information. So we need to find the contribution per bottle. I'm going to start by working in a per litre, and then I'm going to jump up to the per bottle. So for direct materials, we've got 7, direct labour, we've got 15, and then overheads, we don't know. So looking at the high-low, we've got overhead rate of 14 per litre if we're making 3,000. So 3,000 is 14 per litre, so that's 42,000 in total. And if we've got 5,000, then the cost is 12 per litre, which is 60,000. So the difference is 2,000 equates to 18,000 of variable costs. The high-low method effectively eliminates fixed costs. So if it's $18,000 for 2,000, then the variable costs equals 9. 18 divided by 2. We're still working in a per litre, so I can put the 9 up here. So the total per litre is the sum of those, which is $31. So for a bottle is 62. So our costs are 62. The selling price is 75. So that's $13, which is this option here. So a few steps to get there. Hopefully you'll see how I use the scratch pad there. Just try to create what's like a table in the best way I can. So now we need the break-even sales for the period. So break-even sales is the fixed costs divided by the contribution to sales ratio. So down here on my previous question, I worked out the variable costs. The total cost is the fixed cost plus the variable cost multiplied by the cost per unit. We take either the high or the low. I'm going to take the 60,000, so 60,000 equals fixed cost, which we're looking to find, plus the 9 times 5,000. So 60,000 is the figure from over here. I'm going to bring this term across, so minus 9 times 5,000 gives me 15,000 fixed costs. So fixed costs of 15,000, contribution to sales ratio. The contribution we worked out in the previous question is 13. That's based on a sales price of 75. So I've got 15,000 divided by 13 over 75 gives us 86,538, which we can see is the answer here. And in question 23, what's the sales revenue required to achieve this target profit? And the profit is looking for a 12% return on 300,000. So 300,000 times 0.12 is 36,000. And the revenue equals, it's the profit plus fixed costs all divided by the contribution to sales ratio. So that equals the 36,000 plus the 15,000 fixed we've looked at before, divided by that 13 over 75. Can let the calculator do all of the heavy lifting there. 36,000 plus 15,000 and divide by 13 over 75 gives me 294 to 30.7 to the nearest dollar, so I'll round it up. 294,231. Make sure you do round up. This will self-mark. If you did put the 0 in, you wouldn't get the mark. A lot of students do all of the hard work and then they make a rounding error at the end. And that's one of the benefits of making the calculator do the work in one go, because I'm less likely to carry through an error. That's the end of this question. We'll now move on to the other section B question. So now we're looking at Wilco. We're asked what are the budgeted overheads for the 3 models? So obviously that's a calculation, so that's not an outlier. What is the total cost per unit? Once again, a few calculations needed. This one could be an outlier. Select whether each of the following justifications pertaining to the application of activity-based budgeting is or are correct or incorrect. The value of overheads is relatively significant. That's correct. That's one of the reasons we use activity-based budgeting. The higher the overheads, the more useful activity-based budgeting is. The overheads per unit for each model of tyre are all fairly similar. If it was the case that the overheads per unit were similar, then that's less of a justification for ABB, so that one's incorrect. And finally, Wilco is applying advanced manufacturing technology in its production that involves a range of activity types. What that means is it's much less likely to be a labour-intensive production line because it's using advanced manufacturing. That means these costs all go into overheads, so then ABC becomes more justified. Which of the following are least likely to be affected by the implementation of ABB? The information system. Normally, when we're introducing activity-based costing or activity-based budgeting, we have to look at the information that's being collected and the systems sitting around that, and they normally need to be changed, often quite significantly. The mission of Wilco, that is unlikely to be affected by this. This is not a strategic change to the organisation. Technical competencies of the finance team, that's likely to be affected if they've never done ABB before. Would be new learning for them. And pricing decisions for the tyres. If you're going to introduce ABB, you're very likely to lead to changes in prices based on the better information you get from ABB. And then, which 2 of the following statements is not a limitation in implementing ABB in Wilco? Option 1, it deals with significant overheads that are driven by many different activities, drivers. That's a reason for implementing it, so that is not a limitation. It is complicated and expensive to implement as it requires detailed analysis of overheads and measuring of activities. So that is one of the challenges or the limitations of ABB. And so we're looking for the nots. We'll leave that one out. It may provide misleading information as many fixed costs do not vary with changes in volume of drivers in the short run. Whilst it's true that fixed costs generally don't vary in the short run, the benefit of ABB is that the allocation of those overheads will be more accurate or better. So it's not misleading information, it's actually improving the information based on this process. So there's only one left. It may provide misleading information when most overheads are non-production volume related. That's often one of the reasons for introducing ABB. So because we're looking for the ones that are not limitations, that's the correct answer. So we have 3 outliers in this question, and now we've got the calculation to do. We're told Wilco specialises in making a range of rubber-based products, including car tyres. The 3 different sizes, Model R, X and W. The production of these tyres involves usage of advanced manufacturing technology with similar processes and activity types. The budget information for the upcoming year, production capacity to be used is 85%, Prime costs are 1.2 million, and then the overheads are broken down. Production order is 150,000 or 750 per order. Machine setups 380,000 or 3,800 per setup. Production runs 700,000 or 7,000 per production. And storage, I think the alignment's gone, so it's 7,000 per production run. And storage is 100,000 or 125 per ton day. Yeah, the formatting's a bit off there, so that's a bit unfortunate. The budgeted capacity to be utilised as shown above includes the following activity levels pertaining to production. We've got number of orders, number of setups, ton days of storage and production quantity. Standard prime cost per unit for the three models is here, and they are currently adopting activity-based budgeting as their planning process. This is a horrible question to be doing in the Scratchpad, just because we are going to have to come up with quite a complex table to try and cover everything. Sometimes I do talk about taking information and putting it into the Scratchpad, jump into a spreadsheet in section C and doing that, and then coming back with the answer. I would like to do that, but there is so much information I need to pull in that I think I'm just as well doing the calculation in this table. So I'm just going to pull through each of these four costs here. So we've got production order, setups, got production runs, and then we've got storage. And then we're going to build the table for each of these. So order, so number of orders for R is 30 at 750 per order. Is 22,500. And then we need 35 and 25, so that's 26,250. That's 18,750. Now setups are at 3,800 per setup, and we need 16 for R. Is 60,800, and we need 12 for X, so that's 45,600, and then we need 15 for W, is 57. Okay, production runs. With the benefit of hindsight, I've made a little mistake here, just in terms of efficiency. So production runs will also be linked to setup. So what I should have done is added the 7 and the 3,800 to get 10,800, and then done one row of calculations. I'm committed now, but I definitely missed an opportunity to save some time there. So that's 7,000 lots of 16 is 112, 84,000 and 105. It's a very long-winded question, 3 separate calculations. Not really sure the benefit of doing it 3 times. If you can do it once, you can do it 3 times. And then storage is 125 per ton day, and there are 120 for the first one, so that's 15,000, 18,750, and then 23,750. Because I've already got this in my calculator, I'm just going to go up the column there. So I had 10, 105,000, 57,000, and 18,750. So this one's 204,500. The middle one is 174,600. And then the last one for R, 210,300. That definitely took more than 3.6 minutes, but we can get away with it because we banked that early time in those early marks. We've got another calculation to do next. Total cost per unit. And again, unusually this uses the costs from before. So I'm just going to add to my table. I need to add to this the prime cost, which is down here. So that's 328.67. It won't let me put a decimal point in, so I'm going to assume that I have to round that up then to 329. This one is 174,600 divided by the 1,300 units. Is 134.30. Add to that the 105, so that's 239. And then the last one, and I add the 120, so that's 324.5, so rounds to 325. So I'm at the end of section B now. I've answered all of the A's and all of the B's, and we'll do a separate video for section C.